Thank you for joining us this morning. I'm going to take you through some of the economic outlook perspectives that I've done some research on. I work very closely with Andre Roux. So I think it's important just to have an understanding, the sense of some of the key indicators, where we come from and where we're actually going. Over the last 20 years, if we look at GDP growth in South Africa, we see it has trended quite significantly under the 6% mark. Why I'm pointing that out is that GDP growth, at least for us to dent inequality and poverty, has to reach at least 6%. If we look at inflation, inflation has taken a bit of a different path. We've gone out of the 4 to 6% range, you'll see here, especially during the recession period. But with the sound monetary policy and the SARB really pointing and putting interest rates, controlling interest rates around this period, we've come back between the 4 and 6% mark. So we see unemployment, with this picture in mind, is currently at 27.7%. But remember, this is a narrow definition. It's important to understand that whatever happens in the economy regarding inequality will have a significant impact in terms of South Africa's growth, the social cohesion, and even political risk. So we're seeing that there's more than 30 million people in South Africa. We've got a population of 55.9. Of those, 30 million are living in poverty. What does that mean? People are living on less than 1,000 rand effectively a month. There is a rising middle class. You may have seen some statistics and some reports coming out from the Unilever Marketing Institute. They look at a lot of the buying patterns, disposable income habits of the middle income group. But these people are heavily indebted. So the amount of debt that they are actually accessing is rising. So just over 50, it was originally 54% in 2000, which it's jumped in terms of its ratio to 76.9% in the last year. There's a high level of dependency on social grants in South Africa. Of course, we know unemployment drives poverty. But one of the biggest things that drives a reduction in that is education, because it drives up the level of employability. So are we actually growing? If you compare us to our global counterparts or advanced economies, you see that South Africa wasn't doing too badly, even though our growth rate wasn't as high as it should have been. But in comparison to the globe, we lost a bit of track. Where is growth that is actually labor-intensive coming from? I believe it's in your primary sectors and also in your secondary sectors, but primarily in mining and agriculture. And we know that the contribution of those two has been declining over the last 2 decades. And these are the sectors that are labor-intensive. If we are going to absorb the masses of our low-skilled, unemployed population, these are the sectors, not necessarily only agriculture and mining, but these are the sectors where we actually have to boost production and output. So we see here just trends in terms of South Africa. Where has growth actually come from over the last 4 decades? So I look at the change in the structure of the economy. Has the structure of the South African economy changed? If you look at SARS numbers, or SARB numbers rather, you see that the contribution of primary sector, which is largely your agriculture and mining, has declined to less than almost a third of what it used to contribute. Can you see from 27% to 10%? And that's largely because of the decline and the contraction of your mining. The secondary sector has really been stagnant. I think that the large part of the growth comes from construction, and that's mainly government spending. You're seeing a massive growth in financial services, insurance industry, real estate, and so forth. And it's grown such that from 13 to 22%. Government services, if you look at it in relation to GDP, has been similar. More money going into transport, and a lot more in your trade, which is purchasing, consuming power. We're seeing a lot of shopping malls springing up everywhere. But what it's telling you in terms of the structure of the economy is that we have not changed, really. So I look at the economic factors now in terms of projections. So we all know from an economic perspective that your total output or your gross value add of the economy is made up of these 4 components. And so I look into each and see what are the driving factors in each. So I estimate consumption will go up in the short term. In terms of imports and exports, our imports are growing at a faster level than exports, but in the last year, I'll show you some very specific numbers just to see what the trends have been. But our spending is actually high, so we have, as a result, budget deficits. Woefully low savings in South Africa. I believe government expenditure is also likely to rise. What this is saying is that in 2018, projected growth overall is likely estimated not just by myself, but I've got a conservative estimate of growth of likely 1.6% for South Africa in terms of economic output. It was 1% last year. Government intervention is not necessarily a bad thing. We can't let markets go laissez-faire. But how you manage that is very important. We're still spending more than we have. It's still a bad number to have if you don't have sufficient tax revenue to actually support the repayment of that. Our gross debt is much more, in relation to GDP, it's higher than 50%. This is where we were in 1994. Net exports, what do we expect there? If you look at the numbers in the last decade, we've seen that exports on the whole, except for this period here between 2009 and 12, they have actually been less than our imports. Hence, we have that current account deficit. So South Africans are consuming. We're not necessarily producing as fast enough as we need to have a trade balance that's positive. But in the last 2 years, we are seeing a positive trade balance. Obviously, we know that we are a commodity exporting nation, gold, platinum, iron ore, and all those products. South Africa is not different from many African economies, and our commodity prices have fluctuated in the last year. So this is an average of commodity prices over the last 5 years. We will see crude actually stabilizing and going down to levels of $58 a barrel. Iron ore also going down. This will affect economic output. This will affect our export revenue. But I think on the whole, commodity prices in comparison to what they were 2 years ago, we've seen them stabilize, and they're actually on a positive trajectory for South Africa's growth. And lastly, if you look at fixed investment, this is the money that comes in either from foreign or even domestic investors as a percentage of GDP. Our level has been bound at this 18% mark, and I think that this is what needs to really, greater emphasis has to be placed on this. But we're looking at fixed investment actually exceeding this mark, but it's not hitting the 25% boundary, which it should hit for us to actually see acceleration of growth. We all know what's happened with the sub-investment grade of South Africa's status by both S&P and Fitch. Moody's may possibly maintain its outlook on South Africa and not downgrade us. But the effect of all of this, we know, is that perceptions are very negative. Political sentiment is one of the biggest issues. Fiscal credibility has dropped and declined quite significantly, and we've seen a massive capital flight out of the country last year. But also we've seen a higher level of borrowing costs. These three I expect to rise, hence that 1.6% estimate of growth from the previous year. So now, just to look at the issue of access and financial services, what I wanted to cover here is the importance of the financial services, which is usually looked at from a different perspective. We know that the South African banking system, insurance industry is highly developed, very sophisticated in comparison to other emerging markets, but also it's one of the biggest in the top in the world. Our total bank assets versus total non-bank assets, that's your institutional investors, money market funds, pension fund investment, is quite significant, 4 trillion, 8 trillion. These numbers are not just numbers to look at, but to look at how can we use these to actually foster economic growth. I think the issue of mobile money is a predominant force that's likely to grow our economies as well if we use it quite cleverly. In addition to that, I just compared South Africa to Africa as a whole and some of the higher income OECD countries. And you see that South Africa on the whole, obviously we have much more money in terms of bank deposits, private sector credit to GDP in relation to Africa. But OECD countries have much higher levels in terms of their financial sector development. Some studies have shown that if your growth does not actually come from productive sectors, there's very little linkages to inequality being reduced. Many South Africans are actually insured, and you find that a lot of informal measures such as stokvel, savings groups, and burial schemes, but also in the formal sector, you find that burial societies and funeral policies, which one of the beneficiaries is, of course, Sanlam, in the insurance market, is a beneficiary of this 46% of South Africans that are insuring themselves through these methods. The number of pension fund holders, according to the FSB in South Africa, is over 15 million. Are we using these monies more strategically, perhaps? Are we using these monies in a way that could better our growth? I don't believe so. If you compare South Africa, we're in the top 13 biggest pension market globally. in terms of billions of dollars, we contribute $236 billion pension fund assets. But that puts us in terms of compounded average growth rate at 14.1%. That's the fastest growing pension asset market in the world. So I just want to touch on some of the global context issues. You're probably wondering, okay, I've said nothing about what's happening in the US. I've said nothing about Trump. Let me start with the emerging markets. So if you look at global production and output, we're seeing that our gross national income as a whole, if you look at just these economies, emerging market economies, is actually on the rise. In comparison to first world economies, this is last year's numbers, it's actually increased. 32.2% versus that 29% of the top 5 OECD economies. This is a pivotal development that the global south is on the rise. There's a global middle class that's expanding. So the scale of middle class, this is your consumers. These are the people that have purchasing power. Their expenditure is up to $100 per day per person. So we need to look at opportunities that will come from the south, the global south, versus not negating what's happening in advanced economies. The fight between Trump and Xi here is that the issue of protectionism versus globalization. If you begin to see the closing up of markets and the move away from globalization and the protection of national interests, it may be to the detriment of global growth. But what's happening in Europe is quite interesting, is that you're seeing a decline in productivity. This is showing total factor productivity growth. And so we're seeing that this age distribution, which is the 15 to 64, is dropping. So you're seeing a much higher dependency ratio in Europe. They've had to change their pension systems. They've had to make significant changes even to ages of when you get a pension because of some of these fiscal issues that they have in terms of productivity and output. When you look at the level of technology and how technology is affecting farming, one would argue that, listen, farmers are not about to start hiring more laborers. Given the level of technology that's out there, the problems that lie with employing large numbers of, and the legislation and some of the hindrances that they may find, a lot of farmers are actually looking at technology to replace workers, even in manufacturing, in fact. And so this is what is called the Crop Scout, which actually seeds, weeds, harvests, and checks for disease and measures crop. And I think this is probably the direction that the world is going to. So I've got projections here on consumption and output. Just to talk about inflation, estimates for inflation that we will remain within the target range, 4.9, 4.8%. Interest rate on average has been around 9% on average in the last 5 years. It's estimated to be stable. Interestingly, what you do find that they have similarities in terms of consumption and expenditure. This is from Institute of Futures Research that Rue has come up with. There's 2 trajectories that South Africa can go on. We can decide to go sink into rent-seeking behavior, or we can diversify our economy, change the structure of our economy, be players and ensure that inequality is reduced by absorbing the majority of South Africans in the economy. We have a choice to make, but that's all based on what we do in the next month, in the next few months, and I believe in the next 18 to 24 months in the short term. So if we do decide to grow our economy and redistribute, if we do decide to diversify our skills base and incorporate our labor force, industrialize and produce more, if we do decide, if our political environment, which looks like it's stabilizing perhaps, but we still have to see what's going to happen with 29 and the coalition of possible coalition, which is what is being spoken about by a lot of pundits, how will this stabilize our social and our political environment? These things will determine whether or not South Africa enters into this African Renaissance period, versus a situation where we can have diminishing returns to scale, rent-seeking behavior on the rise, lack of retribution for what has happened in terms of what we have seen in state capture reports that have come out, and no effective way of dealing with the rent-seeking behavior to change behavior as well. Redistribution, unhealthy labor force, underinvestment in productive sectors will lead us to a situation where we stagnate and we don't necessarily come out of the 1%, but we decline further down, or we can go up from the 1.6% estimated into the 6% trajectory, which is what South Africa needs. So I'll stop there. Thank you so much.